Hey, good afternoon, Bob. Trade Genius, the 22nd of May. And really pretty quiet day in the market in terms of volume. And so things are just getting pushed around a little bit. I know we had some noise on the trade front and also some noise from OPEC. And so I think that affected things kind of towards the end of the day. Plus, we hit a 20-day high in the market. And a lot of times traders will fade that. And we have a gap fill right here from Sunday that I think the market's going to try to fill, and it looks like it took a shot at it into the close and then brought it back on a hammer here. But to be honest with you, we're going to go in the next 3 days. We're going to start going into Memorial Day, so I don't know if some of this stuff was to push off some stops here, but I wouldn't be surprised even if we got down. It's 27.25. If we push down into here, and I'll show you a SPY chart in a second too, before we push higher again into the Fed meeting. So that's kind of what I'm watching, and all bets are off if we break below this green line here. That means that this bounce off of the downtrend line is a failure. So we're still kind of in no man's land. I mean, look, we're at 0.28% on the day for the market, which is, really nothing. And then so let me flip over to SPY here, and am I on hourly here? I'll get to silver in a second. Silver did just fine today too. So looking at SPY from a different direction here, is that it's still above VWAP, but VWAP's starting to catch up to it now, and so anywhere between here and here is, in my view, consolidation for a move higher. And this is overbought. This area here is for me, and down here is oversold if it got down to there at a short period of time. And money flow has been trailing off here pretty much all day, but I think some of it's to do with traders closing positions before people start bailing out. So tomorrow might be a weak day again, and then Thursday and Friday I would expect a grind higher. And then if you look at oil had a first little down day, starting to get some tension here, and again, our money flow indicator indicated that, hey, people were starting to take some money off the table here, and then just a couple hours later it did sell off, and now we're watching to see if the trend changes on this. But oil's just been a beast, but I think everybody's realizing now that prices are getting too high in oil, and I think it's going to start affecting some things. And you can see right here, if you look at XLE, and I mentioned this on our Twitter feed to our subscribers, is that, oh, wrong one. Yeah, so it broke the trend dots here, and we also had a money flow break here too. So we're getting you're starting to see a break in the companies as well. And if the companies are breaking and the prices are breaking, then gets to be a bit problematic. And we also saw it even in the natural gas stocks today. Southwest Energy was flying, and it broke down. We're out, but I was wondering maybe if I missed the breakout here, but it looks like that breakout failed, and people have been trading CHK, and that also kind of broke down too. But what was really interesting is that what happened in the lumber market for futures have, let me just flip over here. You got, because this is really interesting, is that lumber's been on just a rip, and for for whatever reason, because the housing's been strong, and all of a sudden last couple of days it just broke down. I mean, look at this, no bid. And so I think everything's getting to a point where things are just getting too expensive. And then if you flip over to Toll Brothers, they got their head handed to them today, so their earnings reports weren't that strong. And then if you look at Lowe's Brothers, okay, Lowe's got hit here. You look at Home Depot. Home Depot got hit. Look, everything's starting to get affected now by these interest rates. And so, the housing market, the auto market, credit cards, energy. I mean, everything's getting to a point now where people are literally broke and they can't afford anything more expensive. And so it's really, really starting to cause some fraying here. And, I think it's going to put some pressure on the Fed when they try to continue this quantitative tightening they're doing. Number one, and number two is the interest rates. But the interesting thing about it to me was, I'm mostly in the miners, and AG had a good day today. Considering, right, and then you had silver did well, and then you had some weakness in the industrial components today, but still, it's still just consolidating. And like I said, we sold calls against XME, and almost got taken out of my calls. I had a buy stop on them, and it just got within a penny of it, and before it rolled over. So we're still in those, and like I said, I think if this holds it, then we'll see another bounce here. So I'm definitely convinced that the dollar is going to start rolling over here. Everything's just been pushed too hard. Oil, the dollar, and interest rates are all been tied to the hip. Oil starting to relent. I think you'll see interest rates fall, and then you'll see the dollar go with it. So anyway, and let's see if anything else I want to share. I think that's pretty much it for now. So I think now we're starting to get some of the positioning before the Fed. In the next 3 weeks, we're going to go into summer mode here next 8 trading days, and then we're going to go in positioning mode for the Fed meeting. And then after that, then I think we'll see general weakness in the market, and I think we'll start seeing strength in the currency protecting assets like precious metals. And I think we'll see oil and energy roll over. Anyway, Bob from Trade Genius, thanks for listening, and I will catch you later. Bye.